of those already aged bull trends was a massive acceleration of price and momentum, where all the old rules, throw them out the window. It just went vertical. Silver went from the teens to 50, 20 to 50, etc., and did it in a matter of 3 months or so. Actually, what the acceleration phase in both cases lasted about 3 quarters. So what happened was, and we're already into that process as far as we're concerned.
According to Michael Oliver of Momentum Structural Analysis, these metals are entering an acceleration phase, a period marked by rapid price increases. This phase, Oliver suggests, is reminiscent of past bull markets, which saw significant gains over extended periods. Investors are watching closely as both metals show signs of breaking out of their recent trading ranges. One of the key factors driving these price movements is the broader economic uncertainty. With potential interest rate cuts by the Federal Reserve on the horizon and the ongoing fluctuations in global markets, investors are seeking safe havens. Gold and silver, traditionally seen as stores of value in times of economic turbulence, are benefiting from this shift. Oliver notes that the technical indicators point to a continuation of this bullish trend, particularly for silver, which has shown greater percentage gains compared to gold this year. Looking ahead, the forecasts are optimistic. If historical patterns hold true, silver could soon surpass its previous highs, potentially reaching levels not seen since the peaks of 1980 and 2011. Gold, too, is expected to continue its ascent, driven by strong momentum and favorable market conditions. For investors, this means that now could be an opportune time to consider increasing their exposure to these precious metals as the bull market gains steam. Now, we'll show you the best clips of the latest interview, but first, smash the subscribe button, hit the like button if you like our recaps, and check our description for more info. Enjoy the episode.
Between late 2010 into April of 2011, and silver hit 50 again. Now, let's say that happens, and we are pretty convinced it's going to happen. The technicals are behaving too well, too much in line with those situations in all contexts. No matter which way we look at this thing, we come up with the same conclusion. We're in the acceleration phase, and the final dramatic part is about to happen, likely beginning next month. Of course, we have a Fed meeting beginning the end of this month, early next month, Monday, Tuesday, Wednesday next week. Don't be shocked if they cut rates. They've already told us they're going to cut rates sooner than later. And there's enough things going on out there, uncertainty in all kinds of areas, like the yen. They can't allow that to drop. That's impacted by U.S. yields relative to Japan. Therefore, it's a Fed issue. They've got unemployment numbers that fit their models of, we better pay attention to the employment mandate. Powell's in effect said we're cutting rates earlier. No, there's a 100% chance among consensus that they'll do it by September. Don't be shocked they do it in July. And you can go back. My son Brett has done a study on the Fed cuts and how they time in relation to these, and it's very interesting that somehow silver sort of knows it's coming, and when it does come, it takes off. Anyway, but we've got a meeting coming up, and it wouldn't shock me that around the time of that meeting, early next month, we begin to see the launch again, the final phase of this acceleration. Question is where we start to see it firm up in this 12.7% range, especially next month. I don't expect $50 to even be a pause point. Not even a pause point. I know every technician out there only has one reference point left on the charts anymore. That's the old price highs at 50 and 50, and they think, that's got to be a barrier. My bet is you don't even pause at it. The question is, where are you going to go on the other side? And I don't know. There are long-term measurements of the ratio of silver to gold that suggest that, if gold goes to a normal bull market peak, and by the way, gold normally has 8 full bull markets. You measure from bear low to bull high, at least they're 8-fold. Well, we're only double plus. You have an 8-fold to go to $8,000 gold. Now, what in the world could cause that? There's a lot of things out there that could cause it. Okay. They're all happening right now, even. And you're not going to incrementally go there. Now, if gold ever went to 8,000, silver went to a normal percentage relationship to gold, which, in the last 50 years, silver's been 2.5% of the price of gold, probably, 10 times, 10 different years at the 50. It's been to 2% of the price of gold, 25, 26 years out of the last 50. Well, do 2% of 8,000. Okay. You could go off the page. I don't know where the target is, but I think that the next 3 months, starting next month, but in other words, between here and October, prior to the election, I think silver could do things that would be, frankly, awesome. And unfortunately, I can't put a tag on it except to say I'm very confident that you come up out of this zone, you're not going to stop at 50. And then it's white knuckle flight because nobody then has a reference point.
Yeah.
The price charts jump off cliffs. They don't know where's it going. They have no idea. Okay. Only momentum will help us at that point. But again, following what's happened twice before in the last 50 years, what I just described could easily happen again. And so far, it's happening almost month by month the way it did in those two occasions.
Silver price climbs closer to weekly top. Upside potential seems limited. Silver gains some positive traction for the second successive day on Wednesday. The technical setup warrants some caution before positioning for further gains. A break below the 100-day SMA support will be seen as a fresh trigger for bears. Silver ticks higher during the Asian session on Wednesday and looks to build on the previous day's modest bounce from the $28.70 region, or a nearly 1-month low. The white metal, however, remains below the weekly peak touched on Monday and currently trades around the 29.35 area, up over 0.30% for the day. From a technical perspective, the breakdown through a short-term trading range was seen as a fresh trigger for bearish traders. Moreover, oscillators on the daily chart have just started gaining negative traction and suggest that the path of least resistance for the silver is to the downside. In the meantime, momentum beyond the weekly peak is likely to confront some hurdle near the 29.80 region. This is closely followed by the $30 psychological mark, above which a bout of a short covering move could lift back towards the 30.35, 30.40 trading range support breakpoint, now turned resistance. On the flip side, weakness below the $29 mark might continue to find decent support near the 28.60 region. Now we'll show you more clips, but first, subscribe, turn on notifications, and make sure you share this video with a silver bug, as more people need to know. Enjoy the episode.
Then this country, then that country. Once the realization hits among academicians and so forth, not just the people on the central banks, generally a stupid crowd, but the academicians around them are going to look back and say, you know what, this last 100 years of this central bank silliness, it's just been boom bust cycles. It really hasn't worked. You guys boom bust the monetary policy, and sure enough, we get boom bust markets. And it has not created a copacetic world. And I think things are about to get very uncopacetic anyway because of the political events. But I think that intellectual counter trend wave is beginning. I'm seeing some of it in Europe and talk. I think that I've said before in the last year, a couple of things are going to happen in 2024. And one, we're going to have an uncopacetic outcome to the election. I don't care who wins. We'll take sides. Whichever side wins, it will not be a normal, happy outcome.
Right.
And I'm not going to predict how unhappy, but it's not going to be the normal, well, okay, well, we're the losing party. We'll come back in 4 years and beat you. Meanwhile, we'll fight you in Congress. That's not going to be the outcome. Okay. The other one is I don't think there'll be a Federal Reserve in the next 5 years. Maybe even sooner. I think it'll be abolished, especially if Trump comes in. Another thing, I wouldn't be shocked if income taxes are abolished, largely because it's dysfunctional, especially if we go into a downturn in the stock market and we get another 2008-9 economic consequence, which I think we will. That's going to hurt people's ability to even pay, much less pay on time and so forth and so on. And therefore, already the IRS is not very functional percent-wise in getting the revenue they're supposed to get. So it's a dysfunctional source of revenue for the government, unpredictable source. And I think that, even a lot of Republicans and Trump have mentioned the possibility of something other than the income tax. So a lot of major things could change here and change very quickly especially when these four different asset categories we've defined, gold's already in its acceleration phase, monetary metals. But if T-bonds engage, stock market engages, dollar engages, all of a sudden the noise and the impact of these tectonic plates hitting will have real world consequences, not just affect the markets, but affect everyday life. And I think a lot of changes will occur there. And I think those changes will be such that when gold gets up there, no, it's not coming back down this time. That's its new reality.
Yeah, I know what you mean, and I've heard you mention before how sometimes these things don't change until they're forced to by the
Yeah.
markets, and
Yeah.
we may well be seeing that play out. Last thing, Michael, just in case you had any other comments on any of the politics or the news with the election that you'd like to share. And
I mean, it looks like the outcome's pretty clear, but you never know. And well, I've said it over a year. It didn't matter who won this election. The outcome this time is not going to be a normal, oh, well, that kind of outcome. The process continues. I don't think so. I think it could become uh, quite abnormal, dysfunctional, upsetting, noisy. And I don't think that's baked into the markets. Do you? I don't hear
that,
CNBC or Fox Business talking about that as a stock market variable. Think about it.
What do you think of today's show? Do you agree with Michael? Is he spot on, and will gold and silver bullish rally continue? Or is he wrong and we're headed for lower prices in precious metals? Post in the comments section your honest opinion and feel free to interact with other stackers. Today, I want to send a special salute to Bruce, Tyler, and John for always keeping it positive and actively participating with other community members. Now, watch this video right here because you'll like it. I see you on the other side.